What's up, everyone? Welcome to Blockchain Education Network's Introduction to Decentralized Finance. In today's lesson, we'll be comparing traditional financial structures to the emerging ecosystem that is decentralized finance. One question we'll be tackling is how does DeFi redefine centralized finance and how can we use it? From there, we'll be shedding light on some crypto assets, wallet interfaces, and decentralized applications that will be further explained in videos to come. So to start, let's have an overview of traditional finance. In a nutshell, banks are primarily monoliths that facilitate all transactions worldwide. Banks have the authority to apply monetary controls such as accepting and declining withdrawals, offering lines of credit to businesses, financial institutions, governments, and individuals in the form of loans, while also enabling money transfers and using monetary controls by limiting the minimum amount of money that is allowed in checking and savings accounts. To use an analogy, banks are key authorizers, but also the lubricant that allows the flow of cash to reach desired destinations throughout the financial industry, let alone the world. Simply put, cash is the vehicle. However, there's a major flaw in most, if not all, banking practices, which is human discernment and discretion-based policies, both of which are prone to human-related risk like collusion, corruption, mismanagement, and much more. The Great Recession is a prime example of this, which leads to the question, what other challenges are caused by centralized banking? Well, to start, billions remain unbanked. To provide perspective, the US population stands at 333 million people, of which 55 million are considered unbanked. That's about 14% of US households. On a much grander scale, the global population sits at 7.8 billion people, 1.7 billion remaining unbanked without an account or access to any financial services. There's also a tremendous lack of financial literacy. 33% of adults worldwide are financially illiterate, meaning 3.5 billion adults lack an understanding of basic financial concepts. Globally, almost half of the population understands the concepts of inflation and numeracy. However, knowledge of risk diversification is the lowest for the major advanced economies, where 64% have a firm understanding of these concepts, while the remaining 28% have a similar understanding. The remittance industry, as of 2018, was valued at $682.6 billion and is expected to reach $930.4 billion by 2036, showing an overall growth of about 36.3%. This is a pretty significant growth rate, considering the fact that two-thirds of the remittance market share is occupied by personal transactions. The issue with the current remittance system is the high transaction fees averaging approximately 6.5%, while transfers and settlement times take about 24 to 72 hours with little to no transparency. Thus, there are multiple transactions across many layers and many players within this chain. In other words, there's a lack of streamlined processes creating multiple opportunities for failure. Now, the world's trust towards their governments are at all-time lows, to the point that governments are considered extremely incompetent and unethical all around, while businesses seem to operate both ethically and competently. In fact, businesses are now expected to fill the void left behind by governments, where about 66% of people feel that their CEOs should take lead rather than waiting for government assistance. And there's no denying that the pandemic profoundly compounded economic disparities worldwide. The wealth gap continues to widen as the global 1% amass exorbitant levels of wealth. In fact, the world's richest 1%, which are individuals with a net worth of more than $1 million, own about 44% of the world's wealth. To put this in perspective, according to Oxfam, between 2009 and 2018, the number of billionaires it took to equal the wealth of the world's poorest 50% fell from 380 people to 26. In other words, the rich continue to get richer while the poor get poorer. Now, this example is tied with unethicality, distrust, and incompetence of currency manipulation. This can be seen with Venezuela's Bolivar, further visualized here in Bloomberg's Café con Leche Index. This index allows us to track the price of one cup of coffee at a bakery in eastern Caracas, Venezuela. Over the past 12 months, it has seen a price jump from 90,000 bolivar to 2,907,000 bolivars, which is an increase of 3,130% in years' time. Can you imagine paying $5 for a cup of coffee at the beginning of a year just to go back and pay $156 for that same cup? That's insane. Simply put, in a centralized system, you're essentially putting all your eggs in one basket. It means you're solely relying on one main entity to facilitate whatever operation is needed to execute your transactions. But what happens when that fails? Well, everything goes bust and you lose all your money. The 2008-2009 financial crisis proves this to be the case. However, with the decentralized structure, it is the exact opposite. Any participant or client upon the network doesn't need to rely on a single entity. So, what is decentralized finance? Simply put, DeFi is leveling the playing field by constructing a sustainable monetary system for literally anybody and everybody. The DeFi community aims to build interoperable application services that will further improve already inefficient systems such as remittances, accessibility, centralization, and transparency. In the DeFi space, we call these services money Legos because of their compatibility. This is all done through six primary features. 1. Permissionless networks. Anyone in the world can connect to the network. Status or geolocation does not prohibit access. 2. Decentralized servers. All transactions are spread across thousands of computers or nodes instead of a central server. 3. Trustless transactions. A centralized authority isn't needed to verify transactions. Instead, trust is set upon the operating protocols created to fulfill the state transactions. 4. Transparency. All transactions are publicly auditable. 5. Censorship resistance. No one can invalidate anyone else's transactions, double spend, or shut down the network. 6. Programmable. Business logic can be programmed and embedded into the interoperable financial services at an extremely low cost. It is with these six key features that we are experiencing the emergence of a new open financial system. Now, what are the impacts of decentralized finance? Well, one, it allows for financial inclusion. Literally anybody that has access to the internet and a smartphone will have the opportunity to access financial services. That means anyone in a third world country will have access to money. This is literally destroying barriers set by status, wealth, and geolocations mentioned before. People in hyperinflation stricken economies like Venezuela or Zimbabwe, or even developing economies seen within Africa and India, were, will be at the same level of access as Wall Street traders. 2. Low cost cross border payments. Cross border payments are more affordable now more than ever, eliminating the need for intermediaries such as money transfer operators like Western Union, MoneyGram, and Walmart, and significantly lowering the average global remittance fee from 6.5% to potentially below 3%. In a DeFi system, a Chilean or Syrian immigrant in the US could inexpensively send money to his loved ones back home at a more cost effective price. 3. Security and privacy. DeFi thrives in allowing users to have full custody of their assets. One of the earliest adopters of this is Bitcoin, which is use of private keys while also providing a platform to transact with whomever an individual chooses and sees fit. Unlike in the current system, custodian unlike in the unlike in the current systems, centralized custodial services put people's wealth and information at risk. In a DeFi ecosystem, the malicious actor will not be able to access other users' wealth or information without their private keys. 4. Censorship-resistant transactions. Since majority, if not all transactions are executed and authenticated on a blockchain, they're completely immutable to an extent, removing the ability of any centralized institution or government to interrupt or manipulate any operation that takes place. For example, Venezuelans are already adopting Bitcoin and stablecoins such as DAI to protect their wealth from government manipulation and hyperinflation. And lastly, 5. Plug and play. Majority of decentralized applications are simplistic and easy to use, offering users the ability to borrow, lend, and transfer their crypto assets and take out a loan or even earn interest or even establish their own means of passive income through a comprised portfolio consisting of various assets and applications. Now, stay tuned for our next lesson where we'll briefly walk through and show you how to set up and fund your MetaMask wallet, finally getting you started in the DeFi ecosystem. And with that said, thanks for watching. Hope you enjoyed it. And if you have any questions, please drop it in the comment section below.